Hey guys, what is up? It is Greg here from Personal Evolution. Today we're talking about how to work out what cryptocurrencies have a promising future, which ones probably aren't worth your time, and how we assess a currency when we're looking down coin market cap or something and seeing that they're all blowing up. I wanted to lay this video out as a framework so we can then dive into specific topics in future videos using the same framework to analyze each one. So you guys can kind of get an understanding of what I look for when I'm looking at cryptocurrencies. And this video really came about because a lot of my friends and family are asking me, "Oh, Greg, what do you make of this cryptocurrency? You know, are you investing in Bitcoin and all that?" Because some of you may know I run my own crypto business, and so yeah, I kind of have an insider view. So I thought I'd capture this in kind of video form and share it with you guys. So if that sounds good, stick around. I'll make some kind of predictions at the end, as usual, and yeah, we'll see where we get to. So yeah, before we get started, just to clear some things up, when looking at coin market cap or another crypto kind of market ranking, the most important thing to check first is the purpose of the crypto you're looking at. And I think there are really three main types. Some people may argue with me on this. So there's a store of value. Now, for store of value coins, for me, this is Bitcoin or Litecoin. Although Mark Cuban recently argued Ethereum may be a better store of value than Bitcoin, but I'll leave this one up to someone else to decipher. I think I see where he's going and maybe make a video on it later. But yeah, for me, store of value Bitcoin, it's kind of Bitcoin as a payment method isn't useful. It's too slow. It's too, it's just not built for that. So this is now, it's become a store of value, even though originally it was intended as a global payment system. So what happens with these coins is it's kind of market sentiment that drives them a lot, and less of maybe more of a technical analysis that you need to do on this. Second type of coin, stable coin. These shouldn't move in theory. So a stable coin, as the name suggests, is stable. They're exceptionally useful for getting paid in crypto. If you want to pay developers, users, creators, on your platform, if that's what you're building. So stable coins are pegged to an underlying asset. The most famous one, USDT, which is Tether, is pegged to the US dollar, as the name suggests, so USDT. And yeah, we don't expect these to change we don't expect them to change that much. They are pegged to a currency still, which will fluctuate. But, it's $1 always. So, what happens with those coins? People maybe trade into Ethereum and then trade out to USDT and then trade back in, because it's a much easier way than taking it out to US dollars every time, because there's usually fees and stuff involved at Coinbase and whatever. There are small fees, obviously, for transacting, but if you keep it all in crypto, it's a lot easier. So rather than taking it out to your bank each time. These guys don't change much, so there's not really anything we can analyze there. And the final one's utility. And these are tokens generally, or called tokens. People use stuff interchangeably, so don't get confused there. But yeah, utility tokens. For this video and the following videos, we'll focus on this category, as they are most like startups. So these ones kind of are most likely to gain and lose value over the years and become more widely used. Hence the name utility token, because they help propagate a network or something like that. Okay, so now we know what we are dealing with. Let's take a look at what metrics we can use to analyze future performance. So, generally speaking, when we talk about investing, there are two types: technical and fundamental analysis. Technical analysis is kind of used for day trading. It's kind of looking at charts and where they kind of draw these crazy stuff on charts on screens and go, oh, okay, this is going to break out here and then to the moon and whatever. You probably see some of that. Whereas when we look at startups, in particular, like kind of a VC mentality, we're looking at fundamentals of a company. You might look at, for instance, the fundamentals of big stocks to see if they're undervalued. So, someone might look at Amazon and go, well, actually, their revenue has skyrocketed. They're only trading at X number of times, so I think they're undervalued. And so they invest in that. And that's kind of more fundamental analysis rather than technical analysis, which is looking at the charts and graphs and going, okay, well, when we get 3 bounces, it pops. So yeah, if you want to find that out, there's plenty of good challenges on there. So yeah, we're going to look at fundamental criteria for analysing these cryptocurrencies. And it kind of seems odd that we look at fundamentals for something that should be used to exchange value, but as we found out, not all these tokens are used to exchange value. These tokens are effectively the companies in a lot of ways, and it's interesting. So running a crypto startup myself, we even see this in the way crypto companies raise money. A lot of VCs will now ask for a percentage of the company. That's pretty normal, but also a percentage of the future supply of the token. In this way, they kind of benefit from both the company's growth and the ecosystem's growth. One of the interesting things about Web3 is the company, it's not like a Facebook or an Instagram of the world. They're not going to suck all the value out of the ecosystem. It's that Web3 is kind of built on this concept that everyone benefits. So when you hold the token as a user of a platform and you invite more users to it, that becomes more used. It's a utility token, as we've kind of said before, and then that kind of puts the price higher and higher. So, crypto fundamentals. There are a number of things to consider when looking at utility token fundamentals. They're very similar to startups or stocks and shares based fundamental investing, but there are some differences. So I've got just a list that I'm going to work through here. So product. So what is the product? How does it work? These are the kind of typical videos you see on what is XRP or something, I don't know. They're usually describing the product. They usually then describe how it works. There are a couple important bits here for crypto in particular. So I think the level of decentralization is very important to look at in a project. The transactions per second, does this make sense for its use case? So, if it's a really slow cryptocurrency like Bitcoin, and they're trying to make a global payments network similar to Ripple, well, Bitcoin settling rates are so slow. It's like nothing even compared to Visa. But then you got at the other end of it maybe something like XRP that settles really quickly, and they're trying to build a global payment system so that works. So there's kind of like technological aspects that you want to look at for the product. Again, we'll go through examples in later videos, but just for now, setting out the framework. So you go product, you then go use case / business model. Is this company selling a product? Is it profitable, or is it like a foundation type thing, like something like Stellar, where they're just purely using the appreciating token to fund activities on and on and on, working with governments and stuff like that to do it. So is it an NGO? When you're looking at business model, there's a great little video on economic flywheels in crypto world, and I really suggest you check that out. It's by Ali Yaha, I think his name is. Well, let me just check that. Well, anyway, I'll link to the video below. It's called Flywheels, and he talks about how you can gain. So, like a layer 1 protocol, which is like the infrastructure, could use a certain type of flywheel to drive growth, versus a layer 2 protocol, which would use a different type of protocol. But yeah, I'll let you check that video out. So product, use case, / business model, market potential. So what market are they tackling? This is so important for startups when you're looking at them. It's like, how big is the market? Is it growing? What are the competitors? So who are other people in the space? What other tokens are they competing against? Then super important, startup investing 101, traction. Have there been early successes? How many users do they have? What's the volume? What's the kind of transactions per hour? Probably more so important in crypto companies. and especially important, number of developers commits per month to the product. I will caveat that with it is super important for decentralized teams, but less so for centralized things. And we'll talk about progressive decentralization in another video. Finally, project teams. So is the team experienced, proven track record? Do they know, have they taken products to market before, that sort of thing? And finally, funding. How are they funding their operations? So these are the factors that I look at when analysing my potential crypto investments, particularly in the utility space. And in fact, beyond that, so stocks and shares, we can use the same framework. In the next videos, like I said, I'll use this framework to look at Ripple's XRP, Stellar's XLM, and Zilliqa, ZIL, if you want the tickers, and a couple of smaller projects that I'm quite bullish on that we work with very closely in the startup that I run. So yeah, if that sounds interesting, please give us a like, give us a subscribe. That really helps me stand out in the YouTube algorithm world. And yeah, I hope to see you in the next one. I hope you enjoyed this. And yeah, if you did find it helpful, leave me a comment and I'll get back to you, because yeah, I'm happy to respond to comments. And if I've missed anything as well, please let me know. And that would be great. So yeah, thanks for listening and hopefully see you in the next one. All right.